Good morning and namaskar. Today we will discuss about one of the foremost premier famous retail giants called D-MART. The name of the company which operates the D-MART stores is Avenue Supermars Limited. It is headed by Mr. Ramesh Damani and Ramakant Baheti. Ramesh Damani has the largest shareholding in Avenue Supermarts Limited, which runs D-MART stores. There are about 164 retail stores with an area of 5.3 million square feet. It's available all over India except the eastern and northeastern India. So, like any other grocery stores, it has food and non-food products and almost everything under its roof, which people ordinarily require. Now, Ramesh Damani is being reappointed as a non-executive independent director of the company for a second term of 5 consecutive years, from 1st April 2019 to 31st March 2024. For 5 years, he is being reappointed. First 5 years are over. Likewise, Mr. Ramakant Baheti is also being reappointed for 5 years as a whole-time director and as Group Chief Financial Officer also. As I said, it is one of the best retail stores in India, competing very well with the likes of Big Bazaar, a future retail company. Now let us see the Q3 results, how Avenue Supermarts has fared in the latest quarter Q3. Net sales are 5,451 crores compared to 4,095 crores in the year ago Q3. Now the sales improvement growth is 33.12% year on year. Year on year 33.12%, but quarter on quarter 11.87%. That too is impressive. Quarter on quarter 11.87 is impressive. Year on year 33.32 is also impressive. So net sales are quite good. The purchase of traded goods. There is no manufacture here, only purchase of traded goods and then selling. The cost of the selling goods, traded goods, has increased by 46.66%. So, goods are being purchased at a higher cost of 46.66, whereas the sales are increased by 33.32%. That means sales margin is probably slightly down. Of course, quarter on quarter also there is a small increase of 6.35%. Employees cost is increased by 24.87%. So when the number of stores are increasing and each store is becoming bigger, employee cost is bound to increase. 24.87% year on year increase is there. Depreciation has also increased by 32.76%. In a store of this nature, the depreciation is also likely to be quite big. From 39 crores to 52 crores, it has increased some 33%. And quarterly increase is 18%. Okay, other expenses has increased by 45% year on year and quarter on quarter 16%. So all expenses are increasing sizably, but sales are also increasing reasonably well. We will analyze it further. Other income has decreased from 14 crores to 9 crores. Now interest cost has increased from 11 crores to 15 crores. Now profit before tax has gone up from 385 crores to 395 crores. Not a big jump. Actually, year on year is just hardly 2.54% has increased profit before tax. So you have seen sales have increased well, but profits have not increased that well. The policies of D-MART are responsible for that. We will see that. Net profit has increased by 2.13% year on year, but quarter on quarter some 14% increase is there. That's good. Basic EPS like net profit has increased only by 2.23%. From 4% to 4.12%. Market price is at 1,396 compared to the 52-week low of 1,063. 52-week low is 1,063. Currently it is at 1,396, or say let us say 1,400. From 1,000 to 1,400. Low current is 1,400. Highest is 1,696, or say 1,700. Now, the increase, annual increase, if you see from what it was 1 year before, there is increase of 13%. So, it is neither a multi-bagger nor a good compounder during the last 1 year. But during the last 1 year, most scripts are down. Actually, most scripts produced minus returns. So now net sales are growing healthily because of the store additions and also higher volumes. The footfalls must be increasing quite well. But the D-MART has adopted some slogans. We are going to sell at the lowest price of the day, lowest price anywhere. So like that. So the margins are bound to come down heavily because of such policies. Why should you have such a policy? You have moderate price, good price. Don't have a high price, but reasonably good price. Now, you are employing a new employees also, and working hours are also increasing in D-MART offices. Therefore, salaries, wages, etc. are bound to increase, and that is likely to reduce the profit margins. Stores are increasing. Now, stores are increasing, but if the margins are also reasonable, then you will produce a very good net profit. But that's not the case. You want to give the customers lowest prices. So, all stores are increasing their stores. D-MART is increasing, Future Retail is increasing, many Reliance Retail is increasing, all people are increasing their stores. That is bound to be there. Therefore, infrastructure, salaries, everything is bound to increase. But if the margins are slightly higher, there is no problem. But right now, the margins are very low. So, D-MART slogan is everyday low cost, everyday low price. And no day we will have higher price than others. Like that. Now, D-MART is increasing the variety of the product that it is selling. Therefore, it's quite, it is attracting more and more footfalls. That is true. D-MART is having some long-term debt and it is not repaying now. 81 crores long-term, not very big. But it has got cash reserves also now, can repay. So, in many ways there are positives. The number of stores are increasing, number of items sold is increasing, number of footfalls are increasing, everything is okay. But the major drawback in D-MART is lowest profit margin. That has to go up. Now, currently the Damani is having 81.2%. Promoter group is having 81.2% shareholding. Now, that has to come down to 75% according to SEBI guidelines. When he will take to that route, we don't know. Probably he may be waiting for the prices for the share price to rise. Let us see. Overall, Avenue Supermarkets is good, but the profit margin has to improve if it is to be attractive to investors. That's what I feel. Till then, the present price earning ratio is quite huge. Price earning ratio is something like 84 or 85. Well, that's not where we can, a small investor, a long term investor like us, can buy. Comparatively, future retail is far better. But in future retail, there was an indication we have seen that he, over a period of next 8 to 9 years, he might, we do not know really, he might like to sell it off to Amazon if the price is right. I don't appreciate that also. Here, low price is something. There also, Big Bazaar was many times putting up boards like that, lowest price, something like that. Okay, quality. See, now quality should be the guide mark and prices should be moderate, not too very low, not high, like that. If that happens, D-MART, Big Bazaar, etc. will be good for consumers and also good for investors. Otherwise, it may be good for consumers but not good for investors. Thanks for listening. I'll be back with you with another very good company. Of course, Avenue Supermarts is a good company. The Future Retail is a good company, but they must become good companies for the investors also. Thank you for listening.